let's do this in English. Yeah. All right. Welcome, everybody. SF Live on site. We're in Beaver Creek. We're at the Precious Metal Summit, and I'm joined by good friend Ronald Stöferle. And Ronnie, it's good to see you again. It's been almost 2 years since we last saw each other.
Yes.
I think in November it would have been 2 years.
I met a friend before, and I said it feels so good just shaking hands now. It feels like as if it was illegal. Yeah, it's something so big, so nice. So no, it's really good. It's my first real conference in ages, and it's great.
No, it's like we're social animals, right? Like we are, like, and it comes out of this. It just feels good. Yeah. It's good for the soul.
Yeah.
Because in our industry, most of it is people. Of course, you have the assets, but connecting and
everybody experienced this Zoom fatigue, and that's As I've said, it's great to be back, and I hope that in 1 year from now, this whole COVID thing is mostly over. Yeah. Because I have to tell you, coming over from Europe, that was quite demanding with all the paperwork involved. It felt like organizing a big expedition to the Antarctica or whatever.
Yeah. No, you're a person of national interest to the U.S. That's why you're allowed here. I saw your tweet the other day.
So. Joe Biden signed it personally.
No, it's mind blowing actually. Like that it's not possible. At least Canada opened their borders recently, so that's possible. But it's good. It's very quiet. I've seen way quieter. I was here 2 years ago. I think that was the busiest I've ever seen it. And this is the complete opposite.
Yeah.
Well, it was really good too as well, because I already had some really good conversations. I'm sure you had the same. You're here as a keynote speaker as well. What are you presenting on?
Well, the title of my keynote is The Monetary Tipping Point. So I'll talk about inflation and what changed and why basically the inflationary drivers are now stronger than the deflationary drivers. That's going to be the key, and then I'll talk about commodities, about gold, about mining stocks. So
Yeah, okay. Mining stocks, obviously we have to. SF Live, we are focused heavily on it. Let's start there. What's your sweet spot? Like, you run a fund, the Incremental Fund as well. There's a gold aspect and gold mining aspect to it. What are you looking at, and what kind of meetings are you taking here in Beaver Creek?
Well, actually, we run 5 funds. So we've got, a couple of funds that combine gold, physical gold with Bitcoin. We've got a strategy that combines mining stocks with cryptocurrencies, other cryptocurrencies besides Bitcoin, and silver, for example. Then we've got basically an absolute return product. So we've got lots of different funds, but in the funds that I'm managing, where we're investing in mining equities, I think now at the moment you don't have to go down into the junior space to find tremendous upside. I had a couple of meetings already, and I will have at this conference and the Denver Gold Show roughly 70 or 80 meetings.
Wow, yeah.
And so far my impression is really good. There's deep value in this industry now.
Yeah.
So, companies producing record amounts of free cash flow. They're increasing their dividends. They're buying back shares. They've got their cost structure under control. We're seeing pristine balance sheets. So I think the general setup is fantastic. And if you compare it to the last cycle, now the HUY, the gold box index, is trading at 250. In the last cycle, when gold was trading at the same level, like roughly 1800, the HUY was at I think 550. So I think at some point the market will realize that there's tremendous value in this sector, but I don't know how long it's going to take. At the moment, it's clearly frustrating.
Oh, very. Yeah, very much so. But Barrick, a dividend yield of 4.8%, I think, this quarter, which is insane.
Yeah.
PE ratios of 2.5. Yeah. I think it was us chatting about it yesterday as well. Alamos Gold, they all have extremely low PE ratios. It's insane. You can't compare it. And how are you loading up? So how are you playing? You can't buy everybody. Do you have a regional focus, obviously gold focus, but what are you looking for? What's your kicker?
It's basically, I would say the investment process is based on our incrementum inflation signal. So this basically tells us where we see inflation going forward, and it has been basically after the whole COVID crisis in spring, it flipped pretty quickly to a very, very strong inflationary signal. So we went into offense, and as you know, offense wins games, but defense wins championships. So for us, it's important to really protect the downside, and that's what the inflation signal perfectly did. So now we're playing offense. The inflation signal is now only at 50% again, so we're slightly more defensive. We've got a higher allocation in the large caps. We've got some royalties and streamers. We've got some developer names. So I think, you know, it's like the Buffett saying, feeling like a little kid in a candy store.
Yeah.
There's lots of great opportunities out there. I think now is the time to do your homework, to start investing. To recalibrate and just confirm the views that you have. That's why I'm here for. I'm meeting most of the companies that we are already invested in. I'm having lots of ideas at the moment, so I'm meeting new companies. So for me, it's exciting. It's really exciting.
Yeah, let's zoom out a little bit. You said to confirm your views and invest based on your views. What are your views more on the gold side now? You mentioned inflationary cycle, of course. Like, where do you see things headed? And let's put the current trading environment or the gold price environment a bit into perspective. We've seen a bit of a run up in gold, but then again yesterday meaning Tuesday, if I'm not mistaken, right? Gold sold off big time again. Oh, big time, $30, right? But I can't make rhyme or reason of it. Maybe you can help me understand what is going on right now and put some context around it.
Well, it's hard to understand gold at the moment. It's as hard as understanding women, you know. And I've got a wife and 3 daughters, so sometimes I think I don't understand how you're acting and how you behave. But that makes it interesting. And with gold, I think it's, if we take a step back, you know, gold was up 25% last year.
Yeah.
I think gold basically discounted very, very quickly, and gold understood and it sniffed out that we'll see enormous fiscal stimulus, enormous monetary stimulus, that we'll see basically all taboos are being broken, and that inflation momentum will start rising again. So I think gold discounted it pretty quickly, and we always said it's first gold, then silver starts moving, and then it's the broad commodity complex, and at the very end of the commodity space it is the agricultural commodities. So I think that game plan worked out pretty well. Now 25% in 1 year is not that bad. Year to date 2021, gold is down 4% in US dollar terms. In euro terms it's down, I think, 2%, so it's actually not that bad. Kai, I have to tell you, I over coffee here at the conference, and I would say people here are, I don't like the term gold bug, but I think people here really like gold, and they like hearing very high price targets. But I just over coffee with some people in this industry, I said, well, I can see gold easily moving to new all-time highs in the next couple of months. And everybody shook his head. I said, no way. So if people in this industry that really have a conviction are already that pessimistic, that's a strong sign. That's a very, very strong sign from my point of view. And at the moment, really nobody cares about gold. Nobody cares. And, you know, for me, you know, I often ask myself the question, when will I get nervous about gold? And I think the cleanest answer is as soon as real rates turn positive. So if we see real rates at 3 or 4% positive, then it's time to say goodbye, or at least lower your allocation.
Well, in the Eurozone, we're at negative 4% or something, right? So it's like in that range. It's basically impossible. It's impossible to see positive real rates. So I think this is basically the foundation for this bull market, and that makes me pretty relaxed. And then there's some factors that I'm gonna talk about in my keynote. It's for example stuff like, you know, huge physical deliveries at COMEX. Stuff like, you know, central bank buying. We saw Thailand, we saw Hungary, we saw Brazil recently buying big amounts. And then there's Palantir. I mean, that's probably, their clients are mostly government agencies, and I think it's one of the best connected and informed companies. They announced that they're buying 50 million in physical gold to hedge against black swans. So I don't know what they see coming. So I think it's not everything is negative, but to answer your question, sometimes I really don't understand gold. Welcome to the club. It is very puzzling, but Palantir is actually a good fact. Like, I've seen a couple tweets about it, but it didn't really make the rounds. Like, like you mentioned it, I'm glad you're bringing it up, but I've seen it on Twitter, a few posts, LinkedIn a couple, but it wasn't that moment you waited for, like breaking the seal on something that could have been a trigger for maybe a bit more momentum. It wasn't that.
I think, what are the biggest opportunity costs for gold? It's obviously the equity market, and it's the crypto market. And I think that, as soon as this, this party as long as this party continues in equity markets, I think gold will have a hard time, and also clearly crypto. I mean, we're really open to crypto, but it's just stealing attention.
Yeah.
And it's, of course, the chart looks much better, and it's for a journalist. It's just to create clicks. It's just more convenient. It's just smarter to write about Bitcoin than about gold that nobody really cares about at the moment. Yeah.
And we're fighting the performance of the main markets as well. Like GDX, I think I compared it the other day. GDX is down 30%. S&P is up 30% year to date. Like, there's no way. Like, as a generalist, it's a no-brainer to invest in the main markets. Why would you go into the risk sector, like GDX even, which has the bigger companies in our sector in it? Like,
well, to some degree, I think it was summer 2019. I thought, okay, this is it. Now the generalists are coming in. That was the point in time when Berkshire Hathaway announced that they're buying Barrick Gold. And I thought, well, okay, this is really going to move the needle. This is going to make a big change for the industry. But then they sold it pretty quickly. So it was just a trade for Buffett. So I don't really see generalists coming in. Most of the funds, they don't have any inflows. So it's tough. It's tough.
Even the mining funds, some of them have outflows right now, and they're fighting. That's why I think the summer has been so weak in the mining stocks as well. Have you heard any of those rumors? Like, officially, nobody ever puts a press release out saying we have to liquidate $30 million of junior mining stocks, but
no, it's definitely happening. And then you've got in fall, you've got Tesla season coming in. So it's tough, but really, if you take a step back for gold trading at 1800, everybody is super negative. I think sentiment-wise, but also when it comes to the commitment of traders report, I think that improved dramatically. And I think from a macro point of view, I just don't see real rates rising significantly. So perhaps it's really one of the few contrarian plays at the moment.
Now, even uranium is running now. So that's not contrarian anymore.
No, and we're running one uranium fund, and we almost closed it down. Thank God we didn't. So it's doing extremely well. But I think Kevin Muir, the writer of Macro Tourist, which is one of my very favorite newsletters, he wrote about the series of rolling bubbles. And I think that's what's happening. It's like I think we're seeing those large moves, for a very, very short time. We saw it with lumber, for example. We saw it with uranium. We saw it with some base metals. Now we're seeing it with coal, for example. So that's a really interesting development. I don't know if it's because there's much more retail money involved at the moment, perhaps. But
let's stay on uranium for a second. You mentioned rolling bubble. Sounds like the bubble is already over, but uranium's risen like 33%, like in the last 3 months. Right, we're at over $40 a pound right now. I haven't checked this morning, but last time was over $40. So, how would you play that sector? There's very few quality names, like on the mining side. Like, how do you position yourself? Do you just buy the Sprott ETF that's buying everything up right now?
No, I have to say I'm not the fund manager. That's Christian Scherer, but he's mostly buying the quality names, and there's not so many.
I can think of 5.
So you don't have to go down to the junior space in the uranium market. I think there is some really interesting companies out there, but from a supply demand view, it's a very simple story, uranium, and honestly we haven't had a hard time talking about that, because people that don't have any clue about energy markets, they think, well, uranium, you're investing in uranium, so you like Fukushima and Chernobyl and you support nuclear bombs or what? I say, no, not really. Have a look at the facts. So So for us, that's a huge success, and I'm very happy for us and for Christian. But I think, of course, that the Sprott ETF made a big change. Short term, perhaps it's a bit overbought, definitely. But I think, still at 40 bucks, many of the companies don't really make any money. So they need something around 50, 55, to really sustainably make money. So I think it's a great spot, but it's a niche. It's a niche topic.
It's a small market. Like Sprott is buying up the physical market. So depends on who you believe, but it seems like the supply side is pretty much empty right now. So that's because I heard the Casa Tom Prom, I hope I said it properly, is also buying buying up the market from the spot market. So which is quite interesting. Ronnie, thank you so much for joining us.
Thank you,
It was great catching up with you in person.
Likewise.
It was good to see you again. And you'll be joining us in November in Frankfurt at the Deutsche Goldmesse. So let's keep our fingers crossed that this will still happen. And can't wait to catch up with you there. You're our opening keynote on day one. So appreciate that.
Thank you very much, guys.
Good to see you.
It's been a pleasure. Thanks.
Take care.
Thanks.